Hello everyone, welcome to my channel. Today I'm going to talk about tax deductions for your small business. Before I get into the video, be sure to subscribe and leave a comment below saying I subscribed. I will try to personally reply to your comments. In this video today, I'm going to talk about tax deductions for your small business that you do not want to miss out on. The important thing is those tax deductions will be deductible when you are filing your tax return during the tax season. When you are running a business, you can deduct all the costs that's associated with the operation of the business. On the other hand, always keep in mind there are rules to these deductions. There are some expenses that you can deduct and some costs that are categorized as capital expenses that must be capitalized instead of deducting them. In other words, those has to be amortized, which means you will have to deduct them over a number of years, which means they have to be amortized. On the other hand, what can a business owner deduct from his business? One thing you want to keep in mind is you can deduct any expense that is ordinary and necessary for operating your business. Therefore, if an expense is ordinary, the IRS states that means it's common and accepted in your business. And if it's necessary, the IRS indicates that those expenses are necessary in the day-to-day operation of your business, which means you can deduct them. Therefore, here are some tax deductions you want to take for your small business. The cost associated with starting your business will be the first expense you would want to deduct. The IRS allows you to deduct your startup costs, for example, marketing, office supplies, travel, meals, advertising, organization costs. The organization costs would be things like filing fees, accounting, and legal services. The important thing to remember with this start costs is that you can still deduct them if your business failed and did not work out. But those costs have to be incurred while you were trying to go into business. Furthermore, those startup costs will be capital expenses and can be amortized. The IRS allows you to deduct 5,000 of startup and organization costs each. The next deduction is supplies and material and general overhead and general operating expenses. For example, office supplies and incidental material, just normal things you will need in your office to operate it. Also, things like dues and subscription and application softwares for your business. Therefore, you can deduct the dues and subscription along with the application softwares. Another deduction you can take is employees and contractors' payroll expenses. Those are fully deductible by a business owner. Also, any individual that assisting you in the day-to-day operation of the business, you will be able to deduct that cost. Most times, you will purchase equipment for your business, like computers, machines, printers, and scanners. All those are deductible expenses. On the other hand, on many occasions, those equipments will have to be depreciated depending on the type of equipment. For example, if you buy a desktop computer for your office for day-to-day operation of the business, and this computer cost $1,000, you will have to depreciate the computer over the computer life, which is 5 years. Therefore, the depreciation expense will be $200. On the other hand, you can deduct $200 per year depreciation expense for the next 5 years for the purchase of the $1,000 computer. The rent you pay monthly to rent an office space for your business is deductible also if you rent a PO box because you have a virtual office and you use the PO box address as your main mailing address. You can also deduct the fees you incur on the payment for the PO box. On the other hand, the utilities you pay in your office space, for example, water, electricity, internet, and office phone, you can also deduct those as a business expense. One of my favorite tax deductions is if you have a retirement plan contribution. As a single business owner, for example, a SEP IRA, a SEP IRA, or a simple IRA, and a solo 401k, and the business is just run by you alone with no employees and payroll, then you're eligible to take a deduction contribution to your retirement accounts. So definitely you can take a deduction on the SEP IRA or the simple IRA or solo 401k. If you are the only one that operates the business and you have no employees, this will be the contribution to those retirement account. You can take a deduction on those too. Now let's look at travel expenses is another deductible expense you can take. For example, if you travel for work, also if you travel to conferences or meetings for your business, or to clients' location to do work for them at their location, these travel expenses will be deductible. On the other hand, travel meals can be deductible. So if you go to a conference that's business related and you pay for lunch and breakfast during this conference, you can deduct the meals you spend on during the conference. However, for meals, there is a limitation on how much you can actually deduct, meaning you cannot deduct the full cost of the meal, but only 50% of the cost of the meal. For example, if you attend a business conference and you spend $20 for lunch while attending the conference, you will only be able to deduct 50% of the $20, which is $10 for the lunch at this conference. So keep that in mind for business meals deductions. The cost of insurance is also deductible. Example of the insurance that's deductible are liability insurance, errors and omission insurance, product liability insurance, and health insurance premiums. Also, there's business mileage you can deduct. For example, business mileage you can deduct 58 cents per mile. Therefore, if you drive from your office to a client location for a meeting, you can deduct the mileage. The important thing to remember with the mileage is that you want to always keep track of your mileage. You always want to do that. There are apps you can use to help you track your mileage, like Mileage IQ. Home office deduction. If you work from your home and your office is located at your home, then you can also deduct home office deductions. The deductions a business owner can take for his or her home-based office is very similar as the deductions that you would normally take for an outside office space you would rent in a storefront location. The main difference is you can take a percentage of these expenses depending on how much of the total home your home office uses. For example, if your house total square footage is 2,000 square feet and the room in the house you are using for your office is 400 square feet of the total house square footage, then only 5% of your home office expenses will be able to be deducted as business expenses. Example of those expenses are mortgage interest, home insurance, your monthly home utilities like internet expense, electricity, and if there is a phone in your home office, you can also deduct that as well. Other costs you can deduct because of your home office is marketing costs, making business cards, merchant card fee. This is if you receive payment from vendors using Square. They charge a fee to process each payment from your customer. So these expenses are also deductible. Also, continuing education. For example, if you want to take a course to further your management skills that will help you run your business better, you can deduct the expenses you pay to take the course. Therefore, you can also deduct your income tax preparation fees, which is the cost of getting your tax return done. Finally, you can deduct licensing and renewal fees. So in conclusion, these are expenses you can take advantage of as a business owner and deduct them on your tax return to reduce your tax liability. I would recommend to keep track of your mileage by using an app, or if you prefer to have it written down in a logbook. That way you will have records of proof of all your mileage that took place during the year. Another very important thing you want to do is to keep all your source documents of those expenses you can deduct in a safe place, like a filing cabinet or drawer. Examples of source documents will be bank statements, checks, receipts, money order, vouchers, and any other source documents you receive and have for incurring the deductible expenses. I also recommend, as a business owner, you could look into opening a SEP IRA or a simple IRA and also a solo 401k. Not only that you will be using those investments in your business to reduce your tax liability, but also they will help you to build wealth in the long run, which will lead to a better and healthier retirement life. Thanks for watching this video and subscribe to my channel.